In our previous video, we discussed how to use the premium to identify the trend. And now we're going to use the premium once again to help us in identifying more specific entries into our trading. So to illustrate this, let's take an example of where the trend is pretty much consistent through the entire course of the day. We have that situation here where shortly after the open on 6/9, the 7-minute z-score on the premium is now positive and remains positive through the pretty much the entire course of the day. So where would we likely take a long trade? Let's now change this around. We're going to shorten this up to, say, a 1-minute chart. Now here on a 1-minute chart, the z-score is already above the zero line as well. Now one way you could use that is to simply wait for the z-score to have a positive slope. The other is to combine it with other indicators such as the volume. But let's see if we can't narrow that down a bit more by way of turning this into a tick chart. All right, we'll do that in just a minute. Anytime the z-score here on the 1-minute chart has gone from a negative below zero to above zero, this would be a buying opportunity. So we'll identify it more clearly here in a minute. But the next opportunity would be right in here, right as it's going above the zero line. Let's look at another instance. Now here, it momentarily goes above the zero line. And then again here it goes above. But generally what we want to do is there are some other criteria that we look for when we actually combine the strategy. And those criteria really aren't being met right in here. But over here, okay, as this is now going above the zero line, that could be considered another buying opportunity. Again, right in here, right in there, or right in there, or in here, or in there. Now that's on a 1-minute chart. Watch what happens when we turn this into a tick chart. Now here we have a 200 tick bar on both the ES and the premium, and we're going to apply the same rules as we did before. That being, when the z-score on the premium goes above the zero line, that's a buying opportunity. All right. So that first occurs right in here. It's just going above the zero line right in here. Now it happens again here and in here. So depending on what other filters you may have working, such as the use of a volume or another z-score on the ES, you can use those in conjunction with one another to identify a specific trading opportunity. Here's another instance right in here. You can see it very clearly right in here, right? And as we move forward, there are many, many opportunities as it goes above the zero line to take that along with other indicators to identify the buying opportunity, like right in here. Okay. So above the zero line for a long trade, and that used in conjunction with other indicators makes a real fine entry. Let's take a look at a short trading opportunity. Now here on the 13th, as the market rallied up, look at the 7-minute once again. Right in here, we have our first possible trade to the short side. Okay, that occurs at around 10:02. We're going to change these into tick charts in just a minute, so we'll just record when that change took place. One took place at 10:02, then starting at 10:23, $11:33, about 12:50. Let's just look at those times. I will change this over to a once again a 200 tick bar, and we'll look at the activity right around those times. Okay, now right around 10:02, we notice that the 200 tick premium is just beginning to drop below the zero line. We're not at much of a new high here, but in any case, that's where that first occurs, and then you can see just within a couple of minutes, the premium goes above the zero line once again, and off we go running into another long trade. Let's check 10:23. Here we're at 10:23, and right there we're dropping below the zero line right in here. So you can see a real clear short right at the top there just by looking at the premium. Let's check 11:33. Now here at 11:22, you can see we're already below the zero line. As we move into 11:33, we're already below the zero line and dropping right in here. 11:32 to 11:33, already in below zero. So that's almost an automatic. And then our last time, 12:50. Alright, so right in here at around 12:50, again, we're already below the zero line. We went below the zero line there at 12:39, right there at the top. Perfect. And remained so into that time frame. So here's once again how you can use the premium on a shorter interval, 200 tick bar for example, to identify more clearly when to actually execute the trade. So once again, long trades as the z-score goes above the zero line, short trades as it goes below the zero line. That's the general trend, but you can use a shorter tick interval as well to identify the specific entry using exactly the same principle. So that's how we go about using the premium in this fashion. We read the premium with this very good indicator, and we challenge it. Throw any other indicator on the premium and see what happens. You'll go pretty much nowhere when it comes to trying to identify opportunities for trading. This is Rod Kusin and Spooman for Risk.